What's up, my fellow harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis. I'm your host, Lord MC. In today's video, we'll dive deep into harmonic technical analysis, and for those of you who are not familiar with what that is, this is just a powerful strategy that combines harmonic patterns with strict Fibonacci ratios to forecast potential price reversals. We will also be looking at what to expect as we approach a heavy week full of economic data. So taking a closer look at the economic calendar this week is packed with pivotal data releases that could sway market sentiment. This week, we are anticipating the GDP figures, which provide a snapshot of economic health, as well as the personal consumption expenditures. This report is crucial for understanding inflation trends and insights into personal spending and income patterns. Additionally, we have to keep an eye out on PMI. This offers a glimpse into business activities and sentiments. And of course, we can't forget the significance of the Federal Reserve Chair Jerome Powell's speech this coming Friday. This often has a profound impact on market direction and investor confidence. So buckle up for a week filled with insights, analysis, and a deeper understanding of how these economic indicators might shape the trajectory of the markets. So don't forget to hit that subscribe button, hit that notification bell so you never miss a video. I also want to mention that I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice or question everything. Do your own research and come out with your own conclusions. So having said that, let's jump right into the charts. Jumping over to SPY here. So the market had a very short week due to the holiday. So we have to take into consideration the volume that we got this last week, because the volume is indicating that it's decreasing, but like I said, it was a short week and you will have less volume that comes with that. So what can we expect here harmonically as I bring on my drawings here? To the upside, if there is more continuation and volume starts to pick up, the next level I'd be looking at is for a retest of 456.43 and then 459.460, where you have that double top from the 52-week highs that we had got on July the 27th of this year. Above that, then you have 466, and then you have all-time highs. So to the downside, if volume starts to come back down, because the RSI is a bit overextended right now on the daily, you could come back down to test 453, 451 where the 90 MA is at, and then maybe come back all the way down to 443 and fill that gap there around 441 and change to test target 2 off of the bullish bat pattern at 440.25. So if we look at over the weekly here, the weekly does have this double top, and it is on decreasing volume right now. The HSI does want to reach that overbought zone, and that could be where that double top is at, around 459.44. If you create that double top, then you could be coming back down to test that potential, fill these gaps to the downside if it plays out as a double top. If not, then there's more continuation above 459. You have that 465 where I'd be looking at, and then you have the all-time highs there. So you're not that far from all-time highs for SPY. It's about 5.4% for the all-time highs that retest. So definitely keep an eye out for the SPY. If there's more continuation, there could be a situation where you could just trade sideways, chop until we get those data numbers for PCE and what Federal Jerome Powell is going to say. Obviously, we do also have the federal rate interest rate decision in a few weeks here, so that could also be more sideways trading up until we figure out whether the Fed is going to raise rates or not. So definitely keep an eye out on the SPY. Jumping over to the triple Qs here. So what can we expect here harmonically speaking? Off of Friday's close, obviously is going to be on decreasing volume due to being a short day, but we did have a shooting star on Wednesday where you close slightly higher than on Tuesday with a hanging man. So right now we are getting a bit of reversal candles here. It's kind of indicating that a potential reversal is incoming, but hard to tell. We definitely have to give it a few days, especially with all the data that's coming in. So what can we expect here harmonically speaking to the upside should you continue getting volume? The next level I'd be looking at would be here around 397.03, and then you have 408.71, which is the all-time highs for the triple Qs. To the downside, if the volume starts to come back down here, the next level I'd be looking for support would be 386.41, right where the 90 MA is slightly above it. But if you break down below that, then you could potentially come back to fill that gap at 378, where I do have a harmonic target at 377.10. Losing that is obviously testing the 21 EMA, and you can come back down to test the 50 SMA, where you do have gap fills to the downside here. So it's kind of hard to say if that's going to be the case, but the HSI here is approaching that midline, so it's going to be make or break here, because that midline here is roughly around that 386.41. Should you break down and come all the way to the oversold conditions here, you could come back down potentially to fill that gap and test 377.10, where the 21 EMA is at. If we look over to the weekly here, the weekly is on an inverted hammer candle, where it did close first week above XA here at 387.11 off of the bearish alt bat pattern. So if there is more volume that picks up as the HSI is approaching that overbought condition, you could see the Qs test hop there around 403.57, and then you have 408.71, which is the all-time highs there. a retest above that and you break that, then you have the dragon pattern calling for a new all-time high for OPR at 424.59. So definitely keep an eye out on the triple Qs as we await PCE data and the federal interest rate decision in a few weeks. Jumping over to the Dow Jones here. So the Dow Jones is very different here from the SPY and the Qs. I want to specifically cover the volume I got on Wednesday because it's relatively high and still comparatively to the weeks before. So it continues to make higher highs here with increase in volume. So if there is more upside here on the Dow Jones, the next level I would be looking at from this bullish bat pattern would be a retest of 357.74, which is a key harmonic target from a previous pattern. Above that, then you do have a gap fill there around 360 and change. Below, if you do find some resistance here as the RSI is a bit overextended, you could come back down for a gap fill there around 351 and change, test the 90 EMA around 349, 350, and then you obviously have a gap fill there around 344. If you do come back down for a retracement, the key important level to hold up would be 343.09. Below that, then you could obviously come back down to target 1 at 339.34, where you do have a few gap fills at 338 and change, and then all the way down to 334. If we jump over to the weekly, obviously the weekly is going to be on decreasing volume due to the holiday, but it is also creating a potential double top here. That double top is around 356.70, so kind of close to that 357.74 I was talking about, where you could create a double top and then come back down. If that plays out, obviously you have gap fills to the downside, but it's too early to tell. We'll definitely have to keep an eye on as we get PCE this coming week. So definitely keep a close eye on the Dow Jones. Jumping over to IWM here. So IWM looks to be consolidating here off of the bullish deep crab above target 1 at 177.67, where it is finding some resistance here at the 200 EMA and SMA. So what can we expect here for IWM into next week? If it continues to the upside here, the next level I would be looking at would be obviously to break the 200 EMA and SMA and specifically get above 181.61, where you did have some resistance where it tested it here on November the 15th. So if it breaks above the 200 EMA, then I could see a potential target there, target 2 at 185.72. Then you obviously have 188 and then 192. Should you find resistance here and economic data is bad, you could potentially come back below here, target 1 at 177.67, where you do have quite a bit of support here with all these, the 9, the 13, 21, and the 50 SMA, but you could come back down off of bad economic data to maybe test a 21 EMA, where it would need to hold support, because obviously below that, that's where the entrance to the gap is, and you losing that, you come back down to fill that gap all the way at 169 and change, and you could obviously test XA here at 168.49. Losing this, obviously you come back down, it's a bit bearish, where there is a gap fill around 165 and change, and then to complete the type 2 return to hop at 160.42. If we go over to the weekly, obviously we have to take into consideration the low volume week we just had. It did finish off of a hammer candle, so to the upside here, you have the 200 EMA weekly calling for 181 and change. Below that, then obviously you have the 90 EMA at 178, and then it gets interesting here all the way to that entrance of the gap at 174. So definitely keep an eye on IWM, because if it finally decides to break up above the 200 EMA, then you could potentially get a little bit bullish here, where it likes to, obviously after it breaks the 200 EMA, it tends to go up for a run into the high 190s and even the 200s. So definitely keep an eye out on IWM. Jumping over to XLF here. So XLF continues to be bullish here, creating higher highs. So what can we expect here off of the bullish bat pattern for XLF? The next level I would be looking for a retest would be the 100% retracement off of the bat pattern at 35.71. Above that, you do have a previous harmonic white swan pattern calling CD here at 37.11. So that's the next level I'd be looking at if it breaks 35.71. The HSI, the RSI, and the AMP RSI are a little bit overextended here, but if there's more continuation, you have a potential bullish crossover here. The golden cross on the EMAs and SMAs approaching, so that could definitely happen next week unless PCE data is bad. You can come back down maybe to retest these levels here. But I want to quickly cover the weekly here, because the weekly does have a bat pattern that coincides with target CD target off the white swan pattern at 37.11 here. You do have 37.27 for target 2, where you did meet resistance a couple times here back in February. So you could generate a potential W formation here, which could potentially be a bearish harmonic pattern forming on the weekly here soon. So the HSI still got room to the upside, and that could definitely be around 37.27. So definitely keep an eye on XLF. Jumping over to XLE here. So XLE is still currently in this Garley pattern, where it's having a bit of resistance here at the 200 EMA. So what can we expect here? It looks like it could potentially be forming a bear flag, still having a bit of resistance here, maybe range bound trading between the 200 EMA, which is around 85, and then 82.51, where it's finding some support here. But if there is resistance here, you come back down to 82.51 for a retest and lose that, then you have target 2 at 81.77. Below that, then you could see $80 and then 77. If you break above the 200 EMA and reclaim target 1 at 85.73, just slightly below the 50 EMA there, you could potentially come back up to test the 50 SMA around 87 and then XA at 90.57. If we go over to the weekly here, the weekly looks like a potential wonky looking hanging man, still not a picture perfect hanging man, but you do have a 921 crossover to the downside. So if you don't find support above the 50 SMA where it did hit resistance, you could come back down to test at 83.92 and then 82.51. Below that, then you have target 1 at 67.27. This is obviously off of the weekly chart, which could take some time, but there is this bearish harmonic pattern, I believe is a crab, that it could potentially play out to target 1 at 67.27. Obviously, if you find support and you break above $86, the next level it needs to reclaim is 90.56 at XA, and then above that, and then you have HOP at 108.63. So definitely keep an eye out on XLE. Jumping over to Apple here. So Apple, kind of similar to what the Qs look like on the chart, with some bit of indecision candles, reversal candles at play here. You did have this hanging man on Tuesday with a shooting star on Wednesday. Obviously Friday is going to be low, but it is a hanging man by definition. So it is finding some potential reversal candles here, but still too early to say. So what can we expect here? The next level I'd be looking at to the downside would be 188.73. Losing that level, that's slightly just where the 90 EMA is at. You can come back down where there's a gap fill around 186, test 184.95, slightly above the 21 EMA. Losing that level would kind of be a little bit bearish here. I do have a 182.94 target, where if you lose that, then you can come back down all the way down to 177. Usually between losing 182.94, you usually trade between 166 and 182. So it would be very bearish if you lose 182.94 in my opinion. Should you find support above 188.73 and create higher highs here, the next level I'd be looking at would be the gap fill there around 195 and change, and then test target 2 at 195.81. Above that, then you do have a new target there at 198.93, then a dragon pattern calling for new all-time highs around 205.38. If we jump over to the weekly here, you left obviously an indecision candle here. It's kind of hard to say the short week that we got, but you also have a potential double top incoming as well, where the double top is around 198.23. HSI still not overbought, so it can continue pushing higher, but if you find some resistance here, then you have the levels I'll be looking at would be the daily target. So definitely keep an eye out on Apple. Jumping over to Microsoft here. So Microsoft does currently have this bearish arc pattern on the daily, where it's finding a bit of indecision candles here above HOP. So obviously on Friday it closed at 377.43 off of a decrease in volume, and that's warranted because of the short week we just had in the market. So what can we expect here harmonically? If volume starts to pick up again to the upside, the next level I would be looking at would be 386.73, and that level is you find that target by taking a Fibonacci retracement from the previous all-time highs to the most recent 52-week lows. The 127% retracement is calling for 386.73. Above that, then you have a more psychological number at 400. Obviously, this is an uncharted territory, as Microsoft did create higher highs here and new all-time highs, so it's definitely kind of battle between bulls and bears to see where that price should be at. So definitely keep an eye out on Microsoft, because it can get quite interesting here. The shark pattern on the weekly also above HOP. You have 2 weeks in a row above HOP now, so there could be more continuation to the upside potentially, even though the RSI, HSI, and the AMP RSI overextended. You can continue with more strength there if the market is continuing to the upside. So definitely keep an eye out on Microsoft. Jumping over to Amazon here. So Amazon on the daily does have this bearish shark pattern, where it is finding some resistance here at the terminal bar at 147.26. So what can we expect here to the upside? If there is continuation for Amazon, the next level I would be looking at is to break terminal bar here at 147.26, then hop at 149.71, 150. Should you find resistance here at the terminal bar, the next level I would be looking for support would be 142.72, the 21 EMA at 141 and change. Losing the 21 EMA change, in my opinion, you can come back down for a type 1 reaction to target 1 at 132.82. Should you get a pullback here in the market, the next level of support that you would definitely need to hold would be target 1, because you could potentially come back here for support, reset some of these indicators, and continue pushing higher down the line. The HSI did cross that midline, so we'll definitely have to keep an eye out on Amazon. If there is more continuation, you cross that midline, you reach these overbought conditions, there's definitely could be more upside on Amazon. If we jump over to the BAT, it could coincide with what I'm saying because the bat pattern is calling for hop at 159.75. So definitely keep an eye out on Amazon. Doing some resistance here at that 50 SMA, very tight here between the 50 SMA and the 50 EMA. So if you break up to the upside, you find volume. The next level, like I said, we'll be looking at would be 258.89, call it 260. Obviously, if you find resistance here, you could come back down to test that 200 EMA around 229, 230. Below that, you do have a gap fill around 225 and change. And then you have a macro retest from a previous harmonic target at 223.79, just slightly where the 200 above the 200 SMA is at. So obviously losing that level, I do think it's bearish for Tesla because anytime from previous history, anytime it loses 223.79, it trades between a range between 223 and 177. So definitely Tesla needs to hold these levels if there's more continuation to the upside. To the upside, we could get very bullish above 260. You break above 260, then you have 263, and then more specifically here around 276, where it did find some resistance here back in September. But above that, then you do have a gap fill around 289, and then you have that psychological level at 300. So the weekly does have a bearish bat pattern where you slightly close 2 weeks now in a row above the 21 EMA. So if there's more continuation here and you get that HSI to continue pushing to that overbought zone, because it did cross the HSI weekly here, you could potentially see a reclaim 258.89 and then XA at 289.63, where there is hop there around 343 and change. Obviously resistance below that will be at 223.85, and then you have 177.25. So you can see why I say that level, it trades between 223 and 177. So definitely keep an eye out on Tesla. Jumping over to Google here. So Google's closed on Friday, obviously decreasing volume, but that candle was on a hanging man. So what can we expect here? Because it did lose XA at 137.60 here. The next level I'd be looking to the downside if it continues coming down here, because there's a potential possibility where you create a cup and handle here. So the next level I'd be looking at would be PT2 at 134.28. The entrance of the gap around 133. You do have that gap fill around 132, where you could come back that low here around the 50 EMA, form that cup and the handle part of the cup, and then continue back up. So obviously losing the 50 EMA would kind of be bearish, and you invalidate that cup and handle, because you do have targets at 131.26, 129.35, and then target 2 again where the 200 EMA is at. Right now the HSI is approaching that midline, so you could potentially see next target around 134 and change. To the upside, if you start getting volume back up, the next level it needs to reclaim here would be 137.60, reclaim 139.16, and finally break above here this 141 range where it got had some resistance here back in early October. Break above that, then you do have 142, 143. If we jump over to the weekly here real quick, we do have a bearish bat pattern where, like I said before in previous videos, XA is a level of resistance, and you can tell why here. It's having a bit of a hard time breaking above that, but if you do break to the upside and hold XA here at 136.90, the next level Google for this bat pattern is calling hop at 152.32. Obviously rejection, you have that gap fill, like I said, the 21 EMA around 129, and then support there at the 50 EMA on the weekly around 122. Obviously losing these levels here, you could come back down to complete the type 1 reaction off the bat pattern all the way down target 1 at 117.12. So definitely keep an eye out on Google. Jumping over to Meta here. So Meta continues to generate these HSI dots on the daily here, approaching that HSI midline here. Should you find support around that midline, then you could potentially start looking for higher highs here. If it continues to the downside, the next level I would be looking at would be 335, and then the 21 EMA around 326 and change. Quickly wanted to jump over to the weekly because you don't really have harmonic targets generated right now. So the next level I'd be looking at would be here off of the bullish crab pattern from the weekly. If I take a favorite retracement from A to D here, it's currently at the 786 of the pattern. So the next level I would be looking at would be 359.78, which would be the 886 of the pattern, and then the 100% retracement at 384.33. You are approaching a potential golden cross on the SMAs here, so there could be definitely more continuation here to the upside. The RSI almost overextended here. It's currently around 68 and change, approaching 70, where the HSI still has room to the upside, and that could be potentially where that 100% retracement is at around 384.33. Obviously below that you can come back down to test target the 90 EMA at 320. Below that, then you have target 2 at 302. So really hard to say where Amazon's at right now, but very close to doing one of the most insane moves I've seen in the market in a while. You came back all the way down here to reclaim everything again just in a matter of 2 years, where it is approaching really close to its all-time high. So definitely keep an eye out on Meta. Jumping over to NVDA here. So NVIDIA did have earnings this week where it beat both on EPS and revenue, where you did generate a new all-time high prior to earnings where it went as high as 505.48, but you did generate on Wednesday high volume off of a hanging man and an HSI dot. Obviously that was going to be warranted with the volume it got after earnings, but Friday you did generate a shooting star, decrease in volume, obviously short day, but what can we expect here for NVIDIA to the downside? The next level I'd be looking at would be the support level there at 470.255, which would be right where the 21 EMA is at. Below that, then you can come back down to test at 451.17 at target 2, and then below that, then you obviously have a gap fill there around 425 and change. If you lose that level, then 411 would be very bearish for NVIDIA. If we jump over to the weekly here, the weekly you did generate an increase in volume with a shooting star here. So the next level, if this is a reversal candle, I'd be looking at the 9 EMA off the weekly, which would be 450, 459, 460 and change. The 13 EMA around 451, which would coincide with target 2 off of the bullish harmonic pattern on the daily. And then you had the 21 EMA there around 436 and change, and obviously the gap fill. So definitely keep an eye out on NVIDIA if this is potentially implying that a reversal is incoming in the markets. Jumping over to Netflix here. So Netflix continues to create higher highs here. So what can I expect here for Netflix if there is more continuation off of the bullish bat pattern on the daily? The next level I would be looking at would be a retest of the 100% retracement of the pattern at 485 even. Above that, you do have a gap fill around 506 and change. If you continue to create higher highs and push even higher, there is another gap fill, a small gap fill around 564, 565. If you do have some bit of resistance here and you don't gap fill, the next level of support would be 466 off the 9 EMA, the 13 EMA at 460, the 21 EMA around 446, and you could potentially come for a retracement down to target 2 at 431.42. If we go over to the weekly here, the weekly HSI is implying that there is more push to the upside potentially, where you could reverse if it reaches this blue zone here around maybe 518, maybe even the gap fill. You could generate a potential HSI arrow down the line. So still too early to tell. We definitely have to see if there is more continuation to the upside on Netflix, so keep an eye out on Netflix. Last but not least, jumping over to Bitcoin here. So Bitcoin continues to find support just above the 9 EMA, even with the whole bearish Binance news we got last week. Bitcoin is still riding above the 9 EMA. So what can we expect here, as it did reset the RSI because it was overextended? I'm looking at the HSI right now. The HSI on the daily did come back down to cross the midlines here. So what can we expect here for Bitcoin if it continues to have some downside here? The next level of support would be 37K, and then the 21 EMA at 36.5, 36.5, 36.6. Anytime it has lost the 9 EMA, it has come back all the way down to the 21 EMA and found support, just like it did back here in early November and then just last week as well. So if we find support here, you could potentially start pushing higher. You definitely need to break above that 38.4K where it found resistance. Above that, then you could definitely see 40 to 42,000. I'm still looking at the 2-day here, harmonic target here, 42K. Obviously, you had that psychological low at 40K, but I'm looking more at 42K. If we jump over to the weekly from this bearish dragon pattern, you did generate an indecision candle last week. The HSI, the RSI, HSI, and EMP RSI are completely overextended. So if we do get some type of pullback, the next level would be looking at would be the 9 EMA, which would be this breakout here around 34.7. Below, more specifically, OPR from the dragon pattern at 32.6, where you broke above from BC here. So definitely keep an eye out on Bitcoin. So that's basically all I have for you guys. I will be streaming on Monday for market open to market close. I stream every day from Monday to Friday, so if you want to catch me there, I do stream live on Twitch. So link to my Twitch is in my description box below. So having said that, I hope you guys have a good rest of your Sunday, and I will see you guys tomorrow. Take care, everybody, and peace.